All right, welcome to BNN Bloomberg's The Open. We are starting a bit early this morning as we await the key data on the GDP story in this country. The picture for the Canadian economy in the month of February just crossing as we begin the get ready for the trading day on this Friday. And on the GDP front, we are just waiting, I believe, on that data point right now. But obviously, one of the big questions has been what kind of GDP report we would be looking like for the month of February. And it looks like we saw a increase of 2.5% year over year versus an estimate for 2.6%. So for the year over year number, up 2.5%, month over month, an increase of 0.1%. The range that we had anticipated from Stats Canada was, or I should say from the Economist who track this, was between 2.2% and 2.7%. And so there might ultimately be a takeaway here that the Canadian economy, as we roll through the first quarter data for 2023, has held up relatively well, certainly compared to what we expected in the latter part of 2022 coming into this year. Still waiting for more headlines on that GDP data, and we were also anticipating what we might get in terms of a preliminary number for March. But just to reiterate, actually I will add that we are getting that flash estimate for March. So just to walk you through this, folks, we just got the February data. On that front, GDP was up about 2.5% year over year. We did see the January GDP revised as well. But for March, we are seeing a contraction. It looks like, of about 0.1% in March. So just going through some of these headlines again, we're going to wait for a full write-through and a full breakdown from Stats Canada on this. As we're doing that, I do want to just bring in our first guest this morning, Charles St-Arnaud. He's chief economist with Alberta Central and a former economist at the Bank of Canada. And Charles, I'm going to continue to walk through the specifics of this data. We're only getting dribs and drabs right now on it. But I guess the headline is that you had a pretty solid February number, but we did see obviously a bit of a cool down in the month of March. What does it tell you about where the economy is right now?
Well, what we have seen so far this year is that the first quarter was set to be quite strong. Actually, I just had a headline that Stats Canada saying that it should be about 2.5%, or that's what they're tracking, considering what we have as the preliminary number for March. And it's kind of, it goes into story that the first quarter of the year has been much stronger than what most economists were expected. We were expected to have growth to be roughly flat, maybe even a small negative in Q1 if you look at all the forecasts of the market earlier this year. So it shows that the economy still has some momentum. That momentum might be gradually fading away.
Yeah. So and just to go back to that March data point, and the way that StatsCan works is yes, we are looking backwards in many ways by zeroing in on a February GDP print, but we are getting that initial estimate on what the picture looked like in the month of March. But I guess, one of the questions we saw in the U.S. this week, Charles, was with the GDP report for the United States. We did start to see a bit of a cool down at a time when we're still seeing worries around inflation. Now, we should be clear, our Bank of Canada has already been on hold with interest rate hikes for a couple of meetings, but we got the minutes from the most recent Bank of Canada meeting where it was clear that inflation worry is still front and center, and it has raised questions about whether the bank has to keep raising rates. When you get the kind of data that we're seeing right now, and we're basically seeing the dollar hold fairly firm after the GDP data this morning, does it change, you think, the messaging at all for the Bank of Canada or their thinking in terms of where the economy is going?
I think it doesn't change. I think if we look at the deliberation they released this week, is that there's some positive sign in terms of inflation, that the inflation is moderating. The momentum is more consistent with the upper hand of the target. So at least it's moving in the right direction. There's also concern that the economy, as I said, was The momentum was stronger than expected. We can see it in the labor market. Job growth so far this year has been robust, considering all the rate increase we've had over the past year. And the unemployment rate is very low, still showing that there's some tightness in the market. So it's kind of all pushed towards, again, the Bank of Canada to be comfortable with staying on hold and continue to analyze what's happening with the data, and then and make having a clearer portrait of the economy later on.
For those just joining us, we did see the Canadian economy in the month of February show growth year over year, GDP up 2.5%. That was a shade below the expectations on Bay Street. What perhaps helps to round out this story is we now have sort of an early look at what was happening in the first quarter of this year, with a preliminary read from StatsCan on GDP being up about 0.1% month over month in February. Excuse me, I should say. We'll continue to track that March number overall. Charles St-Arnaud, Chief Economist with Alberta Central, joining us right now. In terms of what has to be considered when it comes to where the economy lands, you know, everybody's talking right now about whether we can see our central bank, other central banks navigate a so-called soft landing. How do you feel about that scenario right now, just based on the data that's in front of us?
Well, at the moment, we can see that the economy has been much more resilient to the sharp increase in interest rate. Like, we've had 425 basis points increase in interest rates in 2022, yet we've had an economy that slowed in late 2022, but it's showing a lot of resilience and continues to perform relatively well. So the question is, how long will it continue? Are we still continuing to adjust to those high interest rates, or has the adjustment been done? And now that's roughly where we are. So I think that's where the Bank of Canada will want to be patient before taking any decision in terms of whether they need to move their target rate.
Are there any particular parts of the economy that you're going to be watching very closely when it comes to being able to withstand this higher interest rate environment?
Yeah, well, we know those rates and sensitive area of the economy, from housing, which interestingly has been stabilizing, and it's actually some signs that it might be picking up. But then it's not necessarily because of the demand side of the economy. It's more because of the supply side that's extremely weak and keeping probably price higher. Then there's a question of the consumers. We know Canadian households are extremely indebted. So how are they adjusting to higher interest rate, to having to pay more of their disposable income towards debt repayment? And then I think lastly, and that might be very key for the outlook, is what is going to happen to the labor market? Because we know, again, households are very leveraged. They need to spend more on repaying their debt. But as long as they have the income, it's actually easy. But what happens if we start to see job losses because the economy is slowing and they can no longer make those debt payments? So we could have that's probably one more of the negative tail risk, but it's something that I'm watching, that the outlook for the labor market might be also very key for the future.
Charles,